Hello guys, welcome to this first episode of my foundation series. In this video I'm going to be showing you how I get my intraday bias. So without further ado, let's get into the video. So here I've got a diagram on the chart. These lines here are just signaling a new day. And we've got kind of three stages to this signaled in the colours. So the first step, is, well, the first rule actually, not the first step, but the first rule is we have a new bias every day, and old liquidity draws are only valid if the bias aligns. Okay, so say for example for this day we may have had a bias of bullish, however for the next day we could then have a bias of being bearish. Okay, so we don't really just stick to one bias as in terms of like a overall weekly bias, we take it day by day. And then with the old draws, say for example this day was bullish, but then we went bearish for this day, but then the next day was bullish again, we could possibly look to basically target draws that we were looking to target on this day as extended targets. So the first step is to mark out all your 5-minute PDLQ. All that stands for is previous day's liquidity on the 5-minute. So it's very, very simple. How we do this is we just look for the fractal point that created this push down, and then we'll look to see, has this been a body break or has it been a wick break? If it's been a body break, then we will simply just mark this low with a purple line, and that signifies that there is possible liquidity below this low. Yet again here, we have a look, where's the high that made this push down? It was here, okay, like so. And we essentially look, and because there's not one here, we could possibly think that this is a wick break. Let's just pretend. Yeah, again, it's the same thing. Would expect price to close through this level here, and then this would be 5-minute previous day's liquidity. We can also mark out 5-minute liquidity on the current day as well. However, current day liquidity is more likely to give a continuation of a move rather than a reversal, which these kind of are more likely to give reversals. So the most common sequence is 5-minute liquidity to 5-minute liquidity. So what I mean by that is, as the fresh day starts, on gold it is at 11, but on Forex it is at 10, and this is UTC. That's my time zone. So once this happens, we're basically then looking for liquidity to grab, and what we will often see is price come into one liquidity point and then move in the direction to the next one. Okay, so when we get to here, what we really want to be seeing is one of two things. Okay, we're either looking for this to get taken with LAI, that's our liquidity liquidity absorption indicator. So we're looking for that to give obviously our QM, and we're looking to trade out of that. And if we get that, then it's very likely we are going to move to a H4 trigger. So this can be a previous day's high, a previous day's low, or a 4-hour EPA. Now, say for example we don't get that there, and we get outcome 2. Okay, failure to take opposite 5-minute liquidity with an LAI, that should say. But if price fails to liquidate it on the push down, then it's likely that, you know, we might create a little bit of 5-minute liquidity here. I just put that on in red for what you're used to seeing it as. And then we can possibly look to take a continuation maybe out of a 1 hour fair value gap, or, you know, maybe a 1 hour order block, or whatever we have there on the 1 hour, which we could look to trade out of. Now, once we do that, we're more likely to now come and take out a H4 trigger, which yet again would be either previous day's high, previous day's low, or a 4 hour EPA. Sometimes, pardon me, sometimes we won't have liquidity to the upside. The most likelihood is if we only have liquidity on one side of the market, that we're going to come grab that, and then we're going to come and make a move for the previous day's high or a 4 hour trigger. And yet again, this can happen in any way. It can either happen like in a bearish example or a bullish example. Just as long as there's not liquidity on one side, the likelihood is we're going to have a big push down and then target the next 4 hour trigger. One thing or a couple of things you need to know about the 4 hour triggers. So previous day's higher, previous day's low is the strongest reversal points. However, we want to be looking for strong highs and strong lows, and we'll actually get onto that in a little bit. And then the next thing is 4 hour EPA is more likely to give you a deep pullback than a full reversal. And then finally, a double fair value gap. And what I mean by that is, say for example, we've got price moving up like so, and then it comes down like so. We could then look to say, right, well, we've got a fair value gap going through here to here, and we've got a fair value gap going through here to here, and then you can see there you've got a double fair value gap. The likelihood is that when we come into these, we'll just tap into them and then move back down. These are quite strong and can give strong reactions. So looking at reversal logic now, reversals only form after high, strongs or lows are taken. So what I mean by this is if we go over here, say price is moving up, and let's just say all of these lows are daily lows. Okay. If price is moving up here, we're more likely to give a reaction from doing this, taking out lows from when we were moving up, than if we were to do something like this. And just pay attention here, say that's another daily low. Say we take that and then go up here, we're more likely to then go lower because we haven't taken a previous day's low from when we were going up. This is now from when we were moving down, because we're making higher highs, higher lows, higher highs, higher low, question mark, lower high, lower low, higher high, lower low. So this will probably make a little bit more sense when we get onto the charts and see the live examples, but yeah. So that's that. I'll screenshot this and I'll upload it somewhere for you guys to have like a bit of reference. But now let's have a look at the charts. Okay, so here we are on the charts. We're going to have a look at gold first, and then we'll have a look at EU. So the first step was to mark out all your previous days 5-minute liquidity. So we'll just do this, and to know if it's previous day's 5-minute liquidity, all we're looking for is when we take these highs, are we breaking through with a body? Yes. Take this high, are we breaking through with a body? Yes. Take this high, are we breaking through with a body? Yes. Okay. Take this high, are we breaking through with a body? Yes. So there is quite a lot of 5-minute liquidity right here from the previous days. Now, you may be thinking this one doesn't look like it does. However, if we have a zoom in, you can see, I have to zoom in a lot more than that, you can see we break it there. So you just got to be careful and make sure you pay attention. You can see here that this one didn't. We broke through with a wick, but this one did. And you might be thinking, well, this isn't a fractal. I've had a look on other brokers, and it is. It's just sometimes you can have a little bit of a dodgy high or low on other brokers. So this is all the ones we've got to the downside. Do we have anything that could possibly get us into trades from here? We got this, then we got this. So essentially what you can see already is we've already completed stage one, okay, which was, where's it at? Oh god, this is very big now. Yeah, so we completed stage one, which was this blue, okay? So we've taken a high, we've then come down to take a low. So now what we should be looking for is on the 1 minute if there's LAI, okay? And you can see here prices going up, prices going down. So we could very well look to see if we could reverse from this point. Okay, we're not going to be looking at any entries or anything like that. But from here, we can now expect price to go higher. Now, where would I expect price to go if we've taken this? Okay, I would expect price to reach this 4-hour high. Okay, go on a 4-hour chart. Or I would expect price to at least tap in a little bit into here, because look, we've got that double fair value gap there, got one here. If I drag that over, it's included in this one. So lovely stuff there. So it would either be to this high, or this high, or this. Now, one thing we need to be careful of is, are these highs going to give reversals? So is this high going to give reversals? Well, no, because price here is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is a clear uptrend. So for me, I would not expect price to do something like this. Okay, I would not expect price to reverse like that. So I'd then wait for price to come up into here, and I'd expect price to reverse from there possibly. And this looks good because it is close to that 4-hour. So we can now play price forward. Okay, you can see our first target was reached. Okay, now we know price shouldn't reverse from here. So if it does reverse from here, what is it most likely for? To continue higher up to here. Okay. Just pretty much like I said. So now that we've reached here, what do we need to do? We need to wait for LAI. And I wouldn't, yeah, this is not LAI, so this push up here, not valid. Okay, so we're not looking for shorts just yet. Okay, so here you see now, now that we get this LAI, this would be my indication that price can move lower. Now, one thing I also like to do with these previous day's highs is sometimes I will just wait for a 30-minute point of interest, or 1 hour, just to confirm that rejection, especially if we're coming into something very aggressively. Like, you can see big aggressive moves up, like so. And you see here we have nothing really. Okay. And then for me, this here would be a signal that price is going bearish. So now what I would expect is price to come down to, we go to the 4 hour. I would have first expected price to come down to this at a minimum. You have your EPA there, and then you also have EPA here. So this is our next stop, in my opinion. Okay, and then obviously you can see here we have this 1 hour POI, and price will likely sell off from there. Okay, just like so. Okay, it can take its time. Price steps in, and you can see bang, 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 sell off. Or sells off. So what we will do now is we will go over to Euro USD, so you can see this happen on that chart as well, just for another example. Sorry. And yeah, so let's go into that chart now. Okay, so here we are now on Euro USD. So first thing I'm going to do is just kind of look at the overall trend. You know, we're overall making high highs, high lows. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So in terms of if I'm looking for a reversal, if I'm looking to trade up, I'm going to need to take something from at least here when we were going higher. So what I'll do is I'll just mark out a few lows, lows of the day like this. This day was CPI, I think. No, FOMC minutes, sorry. Yeah. So from here, we're going to just have a look for 5-minute liquidity from the previous day. So the first one I can find is this here. That is from when we broke through here. Then next one would actually be this here. Oh no, that's been taken. However, we have some bearish stuff there as well. And then yeah, so this is one of those scenarios where there's not much liquidity. So remember how I said when we only really have liquidity in one direction, the likelihood is that we're going to take this liquidity, then move down to the next 4 hour target. Just come out that previous day's low there. So, I mean, I can probably already tell that there's like some sort of fair value gap here. Yeah. So this would be a simple price goes into here, and then we're looking to target lower, like so. Okay, moves around a little bit, goes down, but remember there's no real reason as to why you would be wanting to look for buys here. Like for me, there's just nothing really. We then go bang, take that. Okay, and I believe we actually had some divergence here, but this is a little bit before when I'm kind of looking to get involved. If we look here, this is like, I'm not even really up until 8 at the most. So, you know, this kind of ended up giving something here. It's not always going to be perfect. However, was there any divergence here? Didn't really look like it. Any on the 1 minute? Yeah, so there was some minor divergence on the 1 minute here. So yeah, again, you could have been looking for shorts out of here. However, we know overall now, you got that H1 POI, so you could have looked there. However, we know overall now that our target should be some of these 4-hour triggers, these 4-hour targets down here. So we could just be essentially looking for continuations and what have you. Now, we tap into here and we get this. However, remember how I was like, sometimes we have to wait and look for, 30-minute or 1 hours. Oh, sorry, no, my bad. Because of this level here, because this is level when price was going down, we should not reverse from here. We should reverse from something when price was going up. My bad. So you can see there, let me have a look on the 5 minute. Was there a sell or something there? A bit inconvenient, that, I believe. Maybe you could have looked here and see on other brokers if this was a low or not. But you can see, obviously, we are coming down into that. However, we should overall carry on with our bearish bias. Okay. You can see, bang. Right, so now that we've tapped into here, we can possibly entertain the idea of price coming higher. We get that. However, price just then starts to tank like so. And you can see here that overall, we can predict that this price is now probably going to go, if we go to the 4-hour, we've kind of got this trend line here. This is the last previous day low in that. And then you can see from there, that's kind of where we start to get that little bit of relief and reversal from in and around here. And then it's the same thing the next day, price. If you have a look here, you can see price will then come up. So there's nothing really here that we've taken. So price took this. It came and took this. So now you would expect price to move off higher. Yeah, again, a lot of these lows are a little bit weird. I'm sure if you checked out this low on a different broker that you would see that it's a clear fractal low. And I imagine that now today, maybe not. Yeah, price ended up coming into that like so. Not too sure what we've reacted from there. If we have a look. Okay, yeah, so we've reacted from one of those double fair value gaps here, so you could expect quite a sharp reaction. We've got a fair value gap there on this side and a fair value gap there, so we can expect a sharp reaction and a sharp pullback from there. And you could expect shorts possibly from here now, depending on whether you got an LAI or not. I imagine this here would be, yeah, so I'd expect price to move down to the downside now. But that is how I read and get my daily bias. If you have any questions, feel free to ask them. I'm sure there will be a lot of questions on this. And then next week, I should have the next episode out on the foundation series. So any questions on this, feel free to ask me them. And I'll see you guys next week for the next episode of the foundation series. Thank you for watching.